I'm James Turk. I'm a director of the Gold Money Foundation. I'm here with Eric Sprott, the founder and chairman of Sprott Asset Management. Eric, I want to start off right away with silver. You've called silver the asset of the decade. We're at 41.66 as we speak. What are you seeing here?
Sure. Well, obviously, I'm very optimistic about silver for a number of reasons. Reasons that most people wouldn't know about are the use of paper money in the silver market. And at the peak, when it was 49.80 or so, there was something like 800 million ounces of paper money trading. And we know that there's about 1 million ounces of physical silver available each day for investment. So this preponderance of sellers just seemed unbelievable. And whenever anybody talks about the speculators in silver, I always say, well, who's the speculator? The guy buying it or the guy selling it? Who doesn't have the hope in hell of delivering it? And so we have this big short position in silver, and I'm sure it's going to resolve very positively to the upside. One other thing I should say about silver is I look at the sales of silver versus gold. The U.S. Mint sells more dollars of silver than gold. The Canadian Mint sells about $1.50 of gold to $1 of silver. I know Gold Money probably sells more silver in dollars than gold.
That's right.
Sprott Money does the same thing. So I see this as a decision by people to decide one versus the other. And they can't keep buying at a 1-to-1 ratio when the price of silver to gold is 40-to-1. So I'm sure it's going to resolve to the upside.
That's an interesting distinction that you're making, that the specs in silver are the paper shorts, whereas the serious players in silver are the physical longs.
Right.
I haven't really heard that before. That's really an important distinction. Yeah. What's likely to happen to the paper shorts?
Well, I mean, they already got seriously burned, okay? I mean, we had the price of silver go from 18 to 48. I mean, there was this massive short position. I think it might have been 600 million ounces at least, let alone what's in the derivative business.
Yeah.
So when you lose $30 on 600 million, you've lost, $18 billion. And that's why I think the raid happened on May 1st. It drove the silver price down so they could get off some of their shorts, but they still have a pretty good short position. Ultimately, they're going to go the way of fiat currency, I guess.
Do you expect a force majeure, that they're just going to renege on the contracts?
Well, there's no way that they can deliver to the contracts. We know that. I mean, there's not enough silver.
There's not enough physical available.
There's not enough physical silver. I mean, we've done analysis of the silver market, and I take my point of view on the silver markets, go from 2005 to 2011. And I can see 4 or 5 entities that change their demand by a total of 380 million ounces. Lack of U.S. government selling. Chinese going from exports to imports, which changed by 200 million. The U.S. used to sell 100 million. The ETFs coming along, which are buying something like 60 or 70 million ounces a year. You add all those up, we can come up with 380 million ounces in a 900 million ounce market. And I always go back and say, well, who was buying it in 2005 that can't buy it in 2011? Like, who is that person that's not buying the 380 million? Huge change in the supply-demand situation in silver.
So you're more bullish on silver than you are on gold? I mean, you're a long-standing gold bull, and it's well known that you're very bullish on the Medal of Kings, but you're even more bullish, is it fair to say, on silver?
I mean, the line I use is that gold was the investment of the last decade. And I think silver is going to be the investment of this decade. And I do believe in the thesis that silver will get back into a 16-to-1 ratio to gold. So gold's over 1,600. So theoretically, silver could be $100. It's at 41 and change. Gold probably goes to some number that's, stratospherically higher than it is today. So that means that silver is going to have a great move. The historical relation for 16-to-1. I see the buying coming in at 1-to-1. I see the supply of gold above ground in dollars is approximately 100 times greater than silver. But the buying's 1-to-1, so something's got to give somewhere.
How long is this going to play out? Are we talking months here? Are we talking years?
Well, my expert for predicting the price of silver is you. And by the way, great call just a few weeks ago when you said the second half it's going to get going. And I really do commend you on that. It's a great call. You just see things developing in the market that could make it explode at any moment in time. I always think, well, in 3 to 5 years for sure it'll trade at 16-to-1. When it actually happens, I don't know. It could get parabolic at any moment. I mean, we have a financial system that's on the edge of a cliff here. So all I know is that you can safely own it, go to sleep at night, and you'll be a winner at the end of a certain time period. And you'll be a big winner at the end of that time period.
I try to conceive why or how somebody would take a short position in silver here, given the extremely bullish and positive fundamentals. Is there any logical thing?
Well, I mean, the only logical thing, and that's what GAD has been after, is that the cartel is always trying to suppress the price of gold and silver. And in fact, I'm of the opinion laterally that knocking silver down was intended to keep the gold price weak. Because silver is easier to move. I mean, it's a very small market. Somebody with money and the printing press or the electronic button can keep the price of silver down, which has a negative spillover effect on gold. It wasn't very effective this last time. As you know, gold only went down 6 or 7%, but silver went down over a third, I guess. And of course, it just stormed right back here again. So
that's because of good physical demand under the market, and you can't create physical silver out of thin air like you can create paper out of thin air.
And I think, quite frankly, one of the reasons gold didn't go down that much is there's latent physical demand for gold. We just saw the Bank of Korea announce that they bought 25 tons. Mexico bought 93 tons. So the paper boys can do all they want, but when the orders come in to buy it, they have to stop the game.
Okay.
We just raised in Sprott physical gold for another $300 million, so we've been to buy our gold recently.
Okay, let's get into the gold side a little bit more.
Sure.